Good day, YouTube. This is Jay Money with Falling Forward Financial. Just another dividend video here. One of these I have, one that I sold. These two dividend payers are outpacing the S&P 500. And as you can see, this just came out a day ago. So in periods of rising inflation and slowing economic growth, which is becoming more and more by the day, such as what we're currently experiencing, there is one constant that investors can count on, and that is the reliability of dividend stocks. I talk about dividend stocks here on the channel from time to time. It's good to have them. Some of them are down, but some of them are not down as much as some other stocks out there. So asset managers at Hartford Funds looked at the performance of the benchmark S&P 500 going all the way back to 1930 and found that dividends contributed 40% of the total return of the index over that 91-year period. So I do articles, videos on Warren Buffett from time to time, and the majority of his holdings, if you look at them close enough, they all have dividends. So he's just collecting millions upon billions of dollars through dividends. I think Coke alone, he gets about $100 million a year just from the Coke dividend. So, and that's the kind you drink, just to make sure, ticker KO. So those of you that are watching Narcos or El Chapo or Queen of the South, the three good shows I recommend on Netflix, just don't get those tied up with the other. So the powder, it's the drink. So through decades that featured depressions and world war, recessions, and pandemic, dividends have always generated positive returns, even during the so-called lost decade of the 2000s. So that's why today we're seeing the highest inflation in 40 years, record high gas prices, and an economy on the precipice of another recession. Investors should seriously consider the wisdom of having income-generating stocks in their portfolios. So that's why I have both, and I'm working to accumulate more dividend stocks, especially while they're down, and especially during this point in time. But first one here, I've talked about numerous times. I have a lot of shares of AT&T. It's a stock that I really like, but it's actually up 13.2%, believe it or not. And they have been down. I used to think a good buy was $28, $29, and then they did their acquisition or whatever they did, and if you had AT&T, you ended up with shares of Warner Brothers, WBD, and so they're still down from that, but probably currently in the $21 range. But the market beat up AT&T stock last year, and the telecom giant announced it would be spinning off, just as I said, the Warner Media division, and slashing its dividend in half, so which they did. But if you have the WBD, I believe that gives a dividend as well, so I don't have a whole lot of it. I almost sold it right after I got it. I wish I would have now, because it is down, and just used that to buy AT&T, but didn't. So while the loss of the entertainment business wouldn't be bemoaned, as it had saddled AT&T with an enormous amount of debt and led to a management team distracted by how it would turn the unit around, the dividend cut was grievous, as the telecom was long one of original widow and orphan stocks that could be counted on to pay out over the years. So a lot of people count on these dividend stocks for their income in retirement, especially if you don't have much of a savings or much of a Social Security. You can get your dividend payment. So would use the proceeds to spin off pay down a good portion of their debt load, and while a 50% haircut to the payout stung, the dividend that's currently yielding 5.3% annually is still well above what other similarly sized corporations are paying. So I think right now for every share it pays like $2.08 a year. I believe that's what it was But now AT&T has more resources to direct to its primary telecom business. And the rollout of its 5G network, that's another reason why I'm staying in this one, is because the 5G is expected to create massive growth opportunities for it and other carriers in the years to come. AT&T is so big, you might even see some of the smaller ones paying them to use part of their network. Maybe we'll just have to see, but you get the gist of it. AT&T is huge, so sometimes they do sublet services or whatever that may be, but time we'll just have to wait and see how that works. So it seems the market finally was woken up to the potential, because after hitting a low of $16 per share in mid-December, AT&T stock has climbed almost 33%. I definitely missed that. I think I did buy some in the low 19s, like $19.02 was the last time I bought. So but if you have AT&T, go ahead and list that in the comments along with your cost basis, any other information you'd like to share. And if there's any other telecom like Verizon or T-Mobile or any of the other ones you want to see a video on, I'd be happy to do that as well. More than likely I have already done videos on them, but I can do an update. Next is Chevron. It's up 20%. I did sell this one about 2 months ago. I didn't think it would go any higher. I finally made a profit on it, got back in the green. Was still getting the dividend on it, but I did sell it. So oil prices remain at elevated levels, even if they are significantly below where they are trading back in March. Even so, the oil giant's stock is down 20% over the past month, as fears that gas prices average a $5 a gallon at the pump will impede demand, just as the country is tiptoeing its way into a recession. Chevron, though, is looking out over the long term and sees not just the United States, but the rest of the world too, will require fossil fuels to thrive. We're just now nowhere near surviving the so-called green energy grid, meaning the oil giants' downstream, midstream, and upstream assets will have sufficient demand for years to come. As a result, Chevron has committed to buying back between $5 billion and $10 billion worth of stock every year through 2026 as one of the world's biggest vertically integrated energy leaders. It will continue to pay out its dividend to shareholders without any trouble, and because Chevron has been able to raise its payout for 35 consecutive years, it is a proper dividend aristocrat. So, two good dividend players. I sold Chevron. I still have AT&T. I'll continue to hold AT&T for, who knows, probably ever. Just keep building that up and keep it building up through retirement, and as long as they don't cut the dividend, it should be good to go. So, but you can leave your comments which one of the two is better, either AT&T or Chevron, or maybe you have two better dividend stocks out there, so that would be interesting to know as well. And if you haven't smashed that like button yet, go ahead and hit that for me, and go ahead and subscribe if you haven't, and hit the bell so you're notified of when the next videos drop. Again, I don't give tax, legal, or trading advice, just stating my opinion and bringing some stocks your way. And I thank you for watching. Happy trading, happy investing, stay green. Cheers.